The Algebra of Wealth by Scott Galloway offers a clear and compelling guide to understanding how wealth is built, not just in monetary terms, but in the richness of life itself. He presents a no-nonsense formula for financial independence, while emphasizing that true wealth encompasses much more than money. Galloway, known for his sharp wit and pragmatic approach, invites readers to rethink their relationship with money, time, focus, and resilience in an unpredictable world. The book is structured around four critical pillars: Stoicism, focus, time, and diversification. These principles are not just financial strategies, they're life philosophies. Through anecdotes, observations, and brutally honest advice, Galloway paints a vivid picture of what it means to attain and maintain wealth in every sense of the word. The epilogue ties together these ideas, reminding us that wealth is not an end, but a means to live a life filled with meaning, relationships, and purpose. Galloway's message is clear. The algebra of wealth is not a shortcut to riches, but a pathway to building a life worth living. Let's dive into each chapter to uncover the principles and practices that define the algebra of wealth. Chapter 1. Stoicism. The foundation of wealth isn't simply monetary, it's deeply tied to one's character and behavior. Building wealth begins with self-discipline, resilience, and the ability to embrace discomfort in pursuit of long-term gains. These qualities, rooted in Stoicism, allow individuals to navigate challenges without succumbing to emotional turmoil. The ability to act rationally under pressure is a skill that often separates those who achieve financial success from those who falter. Stoicism teaches the importance of focusing on what one can control: effort, decisions, and actions, while letting go of outcomes that lie beyond one's influence. This mindset is critical for managing setbacks, whether in investments, career decisions, or personal endeavors. Strong character doesn't develop in isolation. It requires intentional practice and reflection. Developing a sturdy moral compass and unshakable values forms the backbone of long-term decision-making. Individuals with well-defined principles tend to be less swayed by societal pressures or fleeting trends, enabling them to stay focused on their goals. Financial success often demands patience and the courage to make unpopular decisions. For instance, foregoing instant gratification in favor of disciplined saving and investing is a hallmark of those who understand the true meaning of wealth building. Character also drives accountability, pushing individuals to own their decisions and learn from their mistakes instead of blaming external factors. However, strong character alone isn't sufficient. A supportive community amplifies personal efforts and provides opportunities for growth. Wealth building doesn't occur in isolation, and fostering meaningful relationships is key to long-term success. Surrounding oneself with people who share similar values and aspirations creates an ecosystem of mutual support and accountability. Strong networks provide more than just emotional reinforcement. They open doors to knowledge, mentorship, and resources that are often inaccessible otherwise. Communities with aligned goals foster a culture of growth, enabling individuals to achieve far more collectively than they could alone. When character and community intersect, they create a powerful force for resilience and progress. Stoicism provides the blueprint for building this foundation, encouraging a focus on what truly matters and rejecting distractions that lead to mediocrity. With a fortified mindset and thus strong connections, the journey toward wealth becomes not just a pursuit of financial gain, but a pathway to a more meaningful and fulfilling life. The next chapter explores the crucial role of focus in staying on course amid the noise and chaos of modern life. Chapter 2. Focus. The journey toward wealth is as much about discipline as it is about clarity, and focus sits at the heart of it. To succeed, one must master the art of attention, knowing where to direct energy and what to avoid. The chapter opens with the idea of balance. A fulfilling and successful life requires a blend of ambition and rest, intensity and ease. Overworking to the point of burnout is counterproductive, as it erodes the very mental clarity and physical energy needed to sustain focus over the long term. The key is learning to balance dedication with recovery, ensuring that effort remains consistent and impactful. The notion of "don't follow your passion" might sound counterintuitive, but it's a powerful antidote to a misleading cultural mantra. Passion, as argued, is fleeting and often impractical. Chasing passion without grounding it in reality can lead to frustration and failure. Instead, the recommendation is to follow your talent, identify what you're naturally good at, and find ways to build upon it. Talent tends to grow with effort and focus, and pursuing it often leads to the creation of opportunities and ultimately passion itself. When it comes to career choices, the advice is clear. Think strategically. Rather than following the crowd or succumbing to societal pressure, consider industries and roles that offer high growth, scalability, and stability. Careers in technology, healthcare, or finance, for instance, often provide better opportunities for wealth creation than those in saturated or declining fields. Galloway encourages readers to think like investors when choosing their career paths, evaluating potential returns on time and effort. A real-life example that illustrates thinking like an investor and choosing a career path is the story of Jeff Bezos when he left his lucrative Wall Street job to start Amazon. Bezos was working at a successful hedge fund and earning a significant salary, but he saw the emerging potential of the internet in the early 1990s. At that time, the internet was growing at an astonishing rate of 2,300% per year, and Bezos identified this as an opportunity too big to ignore. Before making his decision, Bezos applied a framework he called the regret minimization framework. He imagined himself at the age of 80, looking back at his life. He asked himself, will I regret not trying to build an online business, even if it fails? The answer was yes. By approaching the decision like an investor, Bezos evaluated the opportunity cost of staying in his stable job against the potential long-term returns of venturing into the uncertain but high-growth space of e-commerce. He understood that even if Amazon failed, the lessons and experiences would provide a significant return on his effort and time invested. Bezos also thought about scalability, the hallmark of a smart investment. His hedge fund job, while highly rewarding, was not infinitely scalable. The e-commerce model, however, had the potential to grow exponentially with the spread of internet adoption. Bezos made his decision not purely based on immediate financial gains, but on the long-term trajectory of the industry and his ability to capitalize on it. Today, Amazon is one of the most valuable companies in the world, and Bezos' decision exemplifies how thinking like an investor in career choices can yield extraordinary results. This example underscores the importance of evaluating career paths, not just for short-term rewards, but for their potential growth, scalability, and alignment with market trends. Like an investor diversifying their portfolio, individuals must balance risk, opportunity cost, and long-term value when deciding where to allocate their time and energy. Finally, the author delves into best practices for staying focused in a noisy world. These include creating a distraction-free environment, setting clear priorities, and developing a habit of deep work. One practical suggestion is to implement the to-list system made famous by Warren Buffett. Write down 25 career goals, circle the top 5, and deliberately avoid the other 20. The idea is to channel energy toward what truly matters and cut out distractions that dilute focus. In a world where distractions abound and attention spans are shrinking, mastering focus is a competitive advantage. It's not just about working harder, it's about working smarter, aligning effort with goals, and maintaining a steady course toward success. The next chapter explores how the element of time plays a pivotal role in building wealth. Chapter 3. Time. Wealth in its truest form is deeply intertwined with time. Unlike money, which can be lost and regained, time is a finite resource. Its power lies in the compounding nature of decisions made over months, years, and decades. Successful individuals often recognize that time is not just a backdrop, but a vital asset that can be leveraged to create opportunities, build wealth, and live a fulfilling life. The key to harnessing this power is understanding its duality, the immediate now and the broader scope of the future. The present moment, or now, holds tremendous potential, yet it is often squandered on distractions, procrastination, or indulgent behaviors. Using time effectively in the present sets the stage for future success. The decisions made today, no matter how small, ripple outward into the years ahead. This includes developing habits that encourage growth, such as disciplined saving, consistent learning, and deliberate actions aligned with one's long-term goals. Every hour spent learning a new skill, investing in meaningful relationships, or improving personal health pays dividends over time. Yet many people fail to act in the now because they're paralyzed by perfectionism or lured by short-term gratification. Recognizing that action is better than inaction, even if imperfect, is a mindset that unlocks the potential of today. While the present is where effort begins, the future is where the rewards are reaped. Understanding the future's significance requires embracing delayed gratification and having the foresight to prioritize long-term gains over fleeting pleasures. Compound interest, whether in financial investments or personal development, is a testament to the exponential power of time. Those who commit early to growth, whether it's through investing money, honing their skills, or nurturing relationships, will see their efforts multiply over time. Wealth builders learn to shift their focus from immediate wants to a vision of what they wish to achieve in the coming decades. This forward-thinking mindset isn't about predicting the future, but preparing for it. The interplay between now and the future is where the true mastery of time lies. Acting with urgency today while holding a clear, patient vision of tomorrow creates a powerful dynamic that fuels success. Those who harness this understanding of time often find themselves not only wealthier, but also more fulfilled. They invest in what matters, avoid time-wasting distractions, and stay committed to their goals. As the journey progresses, the importance of diversification emerges, a crucial strategy to maximize the gains of one's efforts and protect against unforeseen challenges. Chapter 4. Diversification. The journey to wealth is incomplete without a deep understanding of diversification, the cornerstone of smart investing. It begins with grasping the basic principles of investing, which center on managing risk and reward. Effective investors recognize that putting all their resources into one venture or asset class is akin to gambling. Diversification spreads risk across a variety of investments, increasing the likelihood of stability and growth over time. This isn't merely about avoiding losses. It's about seizing opportunities in a wide range of markets and sectors. The ability to anticipate that some investments will underperform while others will thrive creates a buffer against the inevitable ups and downs of the financial world. A key to successful diversification lies in understanding the unwritten rules of investing, or what can be called the capitalist's handbook. This mindset views investing as participation in the economic machine rather than as a spectator. Investors who think like capitalists understand that the market rewards discipline, patience, and adaptability. They avoid chasing trends and focus on building portfolios aligned with their goals, time horizons, and risk tolerance. A capitalist mindset also involves knowing how to recognize undervalued opportunities and make decisions free from emotional biases, a skill that becomes increasingly vital in uncertain times. Diversification spans across asset classes, ranging from stocks, bonds, and real estate to alternative investments like commodities and cryptocurrencies. Each asset class has its own risk-reward profile and behaves differently under varying economic conditions. For example, stocks offer growth potential but are volatile, while bonds provide stability and income. Real estate, on the other hand, offers tangible value and can hedge against inflation. Diversifying across these assets ensures that when one performs poorly, another can help balance the loss. Understanding the investing spectrum allows individuals to craft a portfolio that fits their personal circumstances and adjusts as their financial goals evolve. Yet even the most diversified portfolio faces its final boss, the taxman. Taxes can significantly erode investment gains if not managed properly. Savvy investors know how to structure their portfolios to minimize tax burdens. This could involve utilizing tax-advantaged accounts, such as retirement savings plans, or being strategic about when to sell assets to avoid hefty capital gains taxes. Understanding tax implications isn't a luxury, it's a necessity for preserving wealth. Those who fail to account for taxes often find themselves earning less from their investments than they expected. Finally, drawing from a lifetime of investing wisdom, the most valuable advice often comes down to discipline and perspective. Market fluctuations are inevitable, but a long-term view mitigates the panic that drives bad decisions. Seasoned investors don't trust his emotions and emphasize the importance of patience. understanding that the real rewards of investing often come decades down the line. They also underscore the value of learning from mistakes, whether their own or others. In the end, the key is not just in making money, but in sustaining it, protecting it, and using it to create a secure, meaningful life. This wraps the insightful journey through the algebra of wealth, offering a profound understanding of how financial success is not just about dollars and cents, but a combination of mindset, discipline, and strategic choices. The book highlights that true wealth lies in aligning your character with Stoic principles, focusing on what truly matters, using time wisely as a compounding asset, and diversifying both your investments and life experiences. By integrating these principles into your daily decisions, you can create a stable foundation for financial freedom and personal fulfillment. Success is not an overnight phenomenon. It is the result of sustained effort, intelligent planning, and the willingness to adapt and grow. As we move forward, these lessons remind us that wealth is as much about resilience and wisdom as it is about financial acumen. Whether you're just starting your journey or refining your strategies, the tools shared in this book empower you to take ownership of your financial destiny, navigate challenges with clarity, and build a legacy that extends beyond material success. Thank you so much for listening and joining us. If you enjoyed the audiobook, don't forget to like, subscribe, and hit the notification bell to stay updated with more book summaries that help you expand your mind. Drop a comment below to let us know which book you'd like us to explore next, and we'll consider it for our upcoming episodes. We look forward to bringing you more valuable content right here on Page by Page. Until next time, keep learning and growing.